Welcome back to another episode of Hard Money Dispatch, the show that demystifies sound money and helps you see the system for what it is. Today's guest is Sanjay Mavinkurve. He's an early Bitcoiner, spent 20 years at Google building consumer tech products, and today he's the co-founder and CEO of Sovana, which gives property owners a way to tap into their equity so that they can invest in Bitcoin. Sanjay, welcome to the show.
Thanks for having me, Brian. Good to be here.
Now, you have quite an interesting background in tech and social media and Bitcoin. Why don't you give us an overview of where you began with all this and sort of how it led you to Sovana, to Bitcoin, then eventually to founding Sovana today?
Yeah, sure. So, my background and training are both in computer science. As you mentioned, I spent almost 2 decades, not quite, at Google. Joined that company when it was just over 1,000 people, and left when it had grown to almost 180,000 people. So, was very fortunate to be there, and play some small role in the evolution and growth of that company. At Google, I worked on a bunch of products, as you might imagine, over that tenure. Maybe my favorite one might have been Google Maps. It was one of the earliest folks on a very small team. It was just like five of us at the time, who were crazy enough to think we could build a Maps product on a mobile phone. And so I've been a mobile nerd for a very long time. I had a data plan in college when most people didn't even know you could get a data plan on your phone. And so spent 6, 7 years working on mapping on mobile devices, and then worked on a bunch of things after that at Google. About halfway through my tenure at Google, I discovered Bitcoin. So this is in 2010. I was a gold bug at the time, and I still consider myself a gold bug. I love gold. I think it has some shortcomings that Bitcoin solves quite nicely, but I'm still a gold bug at heart. And so in 2012, this is about halfway through my tenure at Google, on an email investing list, a friend of mine said, if you haven't yet paid attention to Bitcoin, now's the time. And this was back in 2012. In that email to the group, he described the properties of Bitcoin. And I remember thinking to myself, if these properties hold, if they're true, and if they endure, then Bitcoin is one day going to underpin the global financial system. It's going to be the monetary base. It is going to be the non-sovereign store of value of choice. Basically, it's going to be digital gold. And because I was a gold bug, I instantly saw that. I don't have the more typical story of dismissing Bitcoin the first time I saw it, only later to come back to it. That wasn't me. For me, it was more of a love at first sight. I saw everything I like about gold, everything I love about gold, without its shortcomings. And so after that, my story is very typical. Fell down the rabbit hole, started evangelizing it. My life sort of centered around Bitcoin. And so when I left Google, I knew that I wanted to spend the rest of my life.
Amazing. Yeah. I also have one of those rare stories where as soon as I encountered Bitcoin, I just thought very, very similar to what you're describing. I just thought, wow, if this is really how it works and this is real and it stays that way, this is going to be a huge deal. It's going to change everything. There's no way, there's no other possibility. And I was also a gold and silver bug and just thought, this could be another form of hard money. That's just, it's just purely digital. And I think you have to have, part of the reason why that's so rare is that you have to have the correct background. Three things I would say. You have to have some kind of background in tech, some at least surface level understanding there. You have to understand something about what money is, economics, and you have to not have too much of a resistance to new ideas, or there has to be some kind of openness to a new revolutionary concept. And it's pretty rare that most people are in that situation that kind of pass all three when they first encounter Bitcoin. So yeah, it's really cool to hear your story.
I've had I actually have a lot to say in response to what you just said, but on the last part, what it requires. So I know you've been in Bitcoin for a very long time. And so over time, as we try to evangelize to people, sort of pattern match on what are the sorts of things that make it click and who are the sorts of folks who don't get it and why. What are the commonalities between the folks who get it immediately and the folks who still haven't done it. I think one thing you need is also a healthy dose of skepticism for authority and for, the expert class.
That's great.
um, yeah, I think that those who have too much trust in the system, and credit here to Jesse Myers, who I think wrote the single best, my single favorite article on Bitcoin is not even an article about Bitcoin as such. It is around this very question of why don't some people get it? Why do otherwise intelligent people not get it? And he points out this notion of skepticism of authority, trust in the system. And that's one commonality I've had. You don't have to be like this crazy conspiracy theorist, right? But you have to not believe everything you're told. Uh, that's one thing. Another thing is like, I totally hear you on gold bugs already having the wiring to be ready for Bitcoin. And one question I always think about when I meet a Bitcoiner who is not a gold bug or who was not a gold bug is if you love Bitcoin because of the protection it affords you against global monetary debasement, against possible confiscation of wealth, against geopolitical risks, against, that you love the self-sovereignty of custodying your own wealth in a way that nobody can take from you. I love those things too. I love all those things too. If you love them as well as a Bitcoiner, why didn't you like gold before? Right? Why didn't you like gold? It's existed for thousands of years. If all these things annoy you so much, as they should, and you are right to, and I loved it that I welcomed you into the fold. Um, but I'm just curious, like gold was here for you, right? Gold was here for you. It wasn't perfect. It wasn't perfect. But it's always a question I have. Like, does this resonate with you? Like, as a gold bug, like, do you also wonder specifically about Bitcoiners who never loved gold?
Well, yeah, I think I wonder just about I've never thought about it in these terms exactly, although it was interesting, but I always had um, just a sense of confusion. The whole thing, what's the word? It's just the whole sort of clash there was kind of confusing to me because I had been interested in gold and silver for a number of years, and then I found Bitcoin, and was just into both, and then started a few years after that started working, as a writer in the finance, fintech, Bitcoin, and crypto space, and worked for an investment newsletter called Nicoya Research in my early days, and some of the biggest investment picks that he had. Jason Hamlin's name, the guy who writes that and owns that company, and he was big into gold mining stocks and Bitcoin and related stocks, and it was all just seen as part of one comprehensive thing. I guess they might call it the quote unquote debasement trade nowadays, but long before that term existed or before people really caught on to the idea, I just saw it as, and we saw it as just sort of where's the opportunity to survive and thrive in this world of continuous and infinite money printing and government central bank irresponsibility. And I'm an opportunist. I try to be neutral when it comes to these ideological things. I know I have my biases and stuff, as we all do, but I was just
What do
sort
you
of,
mean you try to be neutral when it comes to these ideological things?
say again?
What do you mean by you try to be neutral when it comes to these
Well,
ideological
in
things?
my experience, I've just seen people, for example, are all about Bitcoin or all about gold one way or another, and they trash the other and think it's
Yeah, I
it's
see.
idiotic and all that kind of stuff. So I was neutral in the sense of just agnostic to wherever there was opportunity. I would pursue that, and I'm fine with it. And it was all part of the same sound money reasoning, right? All whatever was based on a finite supply that couldn't be printed out of thin air, couldn't be manipulated by uh, a centrally planned economy, central bank, then I saw it as a good thing and didn't really care uh, one way or the other. So
Yeah, that makes sense. I mean, I also, like I said at the outset, I love gold. I'm still a gold bug at heart. I do think there are valid reasons for a Bitcoiner to not love gold, and there are valid reasons for a gold bug to not love Bitcoin. But there's not a lot. In my view, in my opinion, the valid reason for a Bitcoiner to not love gold is the physicality, because you could argue because of the physicality, gold failed in some sense to enforce discipline on fiat currency. And you could argue also the second reason, you don't know how much gold there really is. Those two, I think, are valid reasons for Bitcoiner to not love gold. The valid reason for a gold bug to not love Bitcoin, I think, is really just established history. Big, as much as you and I are Bitcoin natives and, think it's inevitable, it really is only, what, 15, 16 years old. Um, and so now, those, there are gold bugs who have other reasons for not loving Bitcoin. Like I would say Peter Schiff's biggest reasons for not loving Bitcoin are its lack of physicality and its lack of industrial uses, which I think are also reasons to not love Bitcoin.
yeah, all valid points. So let's before we uh, move on and get into Savannah, tell us just a little bit more about your background. So you spent 2 decades at Google leading product design for Android Auto and eventually overseeing some big teams. Then you left to work on Bitcoin at Block, and now you're building Savannah. What was the moment or kind of series of moments that made you decide to leave these very comfortable, prestigious tech careers and go all in on Bitcoin?
Yeah, I mean, I knew I wanted to do it much earlier on. Like I said, I discovered Bitcoin in 2012. It was just that, various circumstances allowed me to actually leave full-time work when I did and spend all my efforts on Sovana. And that happened about a year ago, a little over a year ago now. So early 2025 is when I kicked off Sylvana sort of for real. We were sort of thinking about it, we're working on it a little bit, but in early 2025, it really became, a real thing. So I've been working on it now for a little over a year.
Nice. Okay. Now, most Americans have the majority of their net worth locked up in their home. Savannah's pitch, as I understand it, is that you can put that equity to work in Bitcoin without selling the house, without a loan, without monthly payments. Walk us through how that actually works, because on the surface, it sounds interesting, revolutionary, maybe even too good to be true.
Yeah, I concede that it does sound too good to be true. Yeah, but let me first explain how it works from the customer's perspective. So let's say you're a property owner and you're sitting on some equity in your property. You probably have a mortgage on it too. Solana gives you an easy way to tap into that equity to make an investment in Bitcoin, but in a way that requires no money upfront and no monthly payments. Most other ways of tapping into your property equity will require you to make a monthly payment. And that is something that a lot of property owners either can't do or for whatever reason are unwilling to do. And so what happens is they may be, house rich. They may be sitting on a lot of equity in their property, but they have no way of tapping into that. And that's what Sylvana fixes. So here's how it is. Well, based on how much equity you have in your property, Sylvana qualifies you for some investment side. And the way we do that is we look at the value of your property, we look at how much debt you have on your property. and accordingly, we qualify you for some investment. Let's say, just by way of example, Brian, let's say that a homeowner qualifies for $100,000 of investment. The first step is that Sovana, using our money, using our capital, we buy $100,000 worth of Bitcoin. It's not a loan. We're not talking to a bank. We use our money to buy it. The term, and we set it aside. We set it aside. We don't rehypothecate it. We don't borrow against it. There's no funding business. We set it aside for the entire duration of the term. The maximum term length is 5 years, but you as the customer can end early at any time with no penalty, but you get up to 5 years. At the end of the term, whether that's 5 years later or whether that's earlier, at the end of the term, we take a look at the value of the Bitcoin. It started out at 100K. If the value at the end of the term is appreciated, we split half the profit. So let's say it started at 100K. Let's say at the end of the term, it's 150K. We would write you a check for 25K. And you haven't put a penny into this, right? You haven't put a penny into this, you get a check. Okay. Sounds too good to be true. What's the catch? The catch is that at the end of the term, if the value of the Bitcoin is down, you, the customer, have to write me a check. You have to write Sovana a check for the. So if the Bitcoin that started at 100K ends at 3K, you have to make me whole. You have to write me a check for 20K. Now, keep in mind, that's no worse an outcome as if you'd bought 100K Bitcoin with your own money. You'd still be out 20K, right? It's no worse than if you just bought the Bitcoin yourself. And so, in a nutshell, what it boils down to is you get half of the upside in exchange for covering all the downside on a Bitcoin investment that you didn't put any money into yourself. One last thing, and then I'll let you ask me questions. Where does the property come in, right? So far, it's been my money that we put in. It's been Sylvana's money that we put in, and we didn't talk to a bank or take any kind of money out of your house, so to speak. The only way that your property factors into this is at the time we originate this position. We call our positions BIPs, by the way, for Bitcoin Investment Partnership. That's the name we've given to this deal. At the time we originate the BIP, I'm going to put a $100,000 lien on your property so that I know that in the downside scenario, you're going to pay me what you agreed to.
That answers a lot of the questions I was going to have.
Exactly. If the BIP ends, we tear up the lien. If the BIP ends up, we're all happy. I'm writing you a check, we tear up the lien. If the BIP ends down and you write me a check like you agree, I tear up the lien. We're done. Lien only, you can appreciate this, right? The lien only comes into play if for whatever reason the position is down and you don't pay me as you.
Okay, so it's trying to think. So with traditional, say you borrow against Bitcoin, the Bitcoin is the collateral, and the catch is that you have to pay interest and you could get liquidated. With
Exactly.
this, I'm trying to understand it's a different, kind of similar, but differently structured model where the property is the collateral, and with the loan, you get Bitcoin, and the catch is that there's a lien on the house, and you could not get liquidated, but you would have to pay through that lien. If you don't have the cash to pay back, you're going to have that lien on your house. You have to make you whole, and what you get in return is half the potential upside of the appreciation of what you bought with just the equity in your home. Do I kind of have that correct?
Nailed it, actually. I was paying attention to every word. You got it exactly right. Except that we're not technically a loan. We're not a loan because there's no interest rate, there's no monthly payments. Yeah, it's a deal, right? It's a bit, it's novel. Nothing exists like it, and we try to make it very clear up front. We try to make extremely clear up front that if the position ends down, you have to make us whole, right? So there's no surprises. There's no surprises. And if you do as you agreed, we tear up the lien. The lien only comes into play if you don't make us whole as you agreed.
And you guys take this equity, you invested in Bitcoin, you hold it with a trusted third party custodian, I'm assuming?
Yeah. So we actually let me answer that question, but just to a couple things you'd said as you summarized your
Go for it.
understanding. Um, yeah, we do. There are no margin calls. There's no mark to market. You get the full 5 years to wait out Bitcoin, and we understand that over a 5 year period, it's very, very, very unlikely that Bitcoin's going to be done. Keep in mind that you don't have to wait out the entire 5 years. As I said earlier, if you originate a BIP today, 6 months from now, 1 year from now, Bitcoin doubles, feel free to end the position. Feel free to give me a call or open up your mobile app. Feel free to end the position and I'll write you that check. So you don't have to know where Bitcoin's going to be exactly 5 years later, right? You just have to believe that Bitcoin's going to be up at some point over the next 5 years. Um, yeah, and there's also to differentiate from borrowing against Bitcoin. You don't have to have any Bitcoin with us. Where my passion lies, what I get most excited about is bringing people into Bitcoin. Sovana is designed for folks. Of course, Bitcoiners are going to love us too, to just get more Bitcoin. But what I set out to do was give a way for folks who are becoming orange pilled, want to make a meaningful allocation to Bitcoin. Maybe they bought $100, $1,000 worth of Bitcoin, and now they want to make a meaningful allocation, 1%, 5%, 10% of their net. That's where Sovana tries to help because, as I mentioned earlier, a lot of folks don't have a lot of cash lying around, but they do have wealth in real estate.
Okay, now we've kind of touched on this already, but Sovana's structured as an investment partnership, BIP, as you call it, not a loan. Uh, why does that distinction matter both legally and philosophically, and how does it change the risk profile for the homeowner compared to something like a HELOC, for example?
Right. So let me answer the last question first. So a HELOC, by the way, I should say at the outset, I celebrate all paths to Bitcoin. Different people may have different pathways to Bitcoin. And aside from maybe using too much leverage, which can get you in trouble, if you find a pathway to Bitcoin, I'm happy for you. If that's a HELOC, fantastic. If it's a cash out refinance, fantastic. If you want to sell your Apple shares, fantastic. As long as you're buying Bitcoin, I'm happy. A HELOC certainly is one way for a property owner to, divert some of their equity into Bitcoin. That's going to require a monthly payment. Cash out refinance is going to require a monthly payment. You're going to have an interest rate that you're paying as well. But if that's something you can do, if you're willing to do that, then sure, do a cash out refinance and keep all of the upside in the Bitcoin that you buy, right? Not just half of the upside, but all the upside. Where we shine is, um, maybe you have an investment property where you can't, you know, you can't mess up your cash flows, and so you don't want to service another debt payment, or maybe you just can't afford to take a chunk out of your home and have a larger mortgage payment than you already have. That's really who we're targeting for. And then you had another question. Oh yeah, so yeah, we don't call ourselves a lender because we're not a loan. We're not a lender, right? There's no interest rate. There's no monthly payment. This is a deal that we offer. At the end of the term, the $100,000 investment is $100,000. You owe nothing, right?
Yeah, very novel concept and structure here. And it kind of reminds me how, Michael Saylor has criticized other forms of property as you can't just take a few bricks out of your house or your investment rental and sell it when you need liquidity, for example. And this sounds like it's kind of getting at that, kind of starting to solve that in a way. Now, and on along those lines, Vijay Boyapati describes Savannah as bringing the Michael Saylor playbook to average homeowners. And while Saylor uses corporate equity to acquire Bitcoin, you're using home equity. How fair a comparison is that, and where does it break down in terms of the difference?
I think at a high level, it's a very fair comparison. When folks ask, what do I think of Bitcoin treasury companies? I say, I think they're great. I have always considered myself a Bitcoin treasury individual, right? Um, and by Bitcoin treasury individual, I mean an individual who uses all of whatever I have at my disposal, right? Taps into whatever capital I can in whatever way I can, prudently and responsibly to acquire more Bitcoin. I've been a Bitcoin treasury individual for 14 years. And I think we should have Bitcoin treasury companies. I think we should have Bitcoin treasury sovereigns. I think we should have Bitcoin treasury families. Like, I think every entity should do whatever it can at capital markets, whatever it has at its disposal to acquire more Bitcoin. Now, of course, do it prudently in a way where you can withstand Bitcoin's famous downside volatility. But we're all Bitcoin treasury entities. Um, and Saylor may have different things that he can tap into versus just an everyday Joe. But we're trying to offer another way for someone to do that.
Sounds good. Now, as we mentioned earlier, you come from a product design background at a very high level, Google, Block, now Sovana. How does your design philosophy influence how you're building a financial product? Because a lot of Bitcoin companies make some great tools for Bitcoiners, but struggle to reach the average person.
Yeah, I mean, I think I want the process of originating and then owning a bit to be buttery smooth, the most delightful real estate closing process out there. I think most folks, certainly our customers who own property, have likely gone through a traditional real estate closing process, the smoothest thing in the world. So really want to bring all my product design um, sensibilities to the closing process and the ownership experience of bit, because we're obviously not going to end with bits, right? The goal here is to start by building out a portfolio, a customer base of folks who are into Bitcoin, own Bitcoin, are on their Bitcoin position, so that then we can layer on top additional products and services. So the book really is just the beginning. Everything we do will be based on Bitcoin. Our name, Sovana, actually derives from what we see Bitcoin as, which is the perfect store of value, SO. Uh, and so with that base, we're gonna do a whole lot more on.
So, if Sovana works the way you envision it, what does the world look like in 10 years? Are we talking about meaningful percentage of American homeowners with Bitcoin exposure through their home equity, or is this something that stays niche, or what's kind of the end game vision?
It's exactly that. Most property owners in the United States today, most individual property owners in the United States today have upwards of 50+% of their net worth in their property. Look, I love real estate too. And so I just think that if you think about a pie chart of an individual's net worth, think about how much of that pie chart is dominated by real estate. And all I'm trying to do is get a little bit of that slice of the pie, the biggest slice of the pie that's real estate. I just want a little bit of that, like, some part, open that up some part for Bitcoin. So yeah, you would be reducing your real estate exposure. Actually, you're not even. You're just leveraging your real estate exposure to have some Bitcoin. So yeah, I would love for every property out there to have a Solana position.
That's a great service that you're
Because
providing for sure.
you only have to believe one thing. You only have to believe one thing. By the way, I should have mentioned this earlier, and I want to make it clear now. We want to work with every property out there eventually, but we are starting with investment. We're starting with investment properties. We want to eventually get to everyone, primary residences uh, included, but as we just get going, we're starting with investment.
Okay, so this is only for people who own a rental that they rent out. You can't, like, if you just own your home and it's where you live, you can't do this yet?
Yes, yes is the key part. Um, we will eventually want to get to primary residences. But to begin with, we're starting with exactly what you said, which is rentals or a secondary home.
Interesting. What's the reasoning behind that?
The thinking is that you got to be very careful. It's kind of like when I said you can use leverage generally, but you have to be very careful about it. I think you can use your primary residence in this way, but you have to be very thoughtful and very careful how you do it. And it's really more for us, walk before you run. We want to make sure that we have everything figured out and have done a bunch of these with investment properties before we venture into where, a family sleeps at night, their primary residence. There are ways to do it. It's exactly like leverage. You just have to be really careful.
That makes sense. Yeah, taking the cautious approach. I think that's a very good model, good paradigm to follow for any new business, especially in something as potentially volatile as Bitcoin. So, yeah, good move
We're
there.
also starting out US only, right? Just another example of walk before you run. We're starting at US only. We do one day want to expand internationally.
Right. Very nice. Yeah. I think it's a great vehicle for a lot of people I know who own residential property have the vast majority of the network in it, whether it's just their primary residence or they have rentals too. Either way, that's like their basically their entire portfolio, and they seem to think that's like the best possible thing. I guess you could say the same is true of a lot of Bitcoiners, right? Who are like 90% in Bitcoin. They think this is the best possible thing. I don't get why anyone does anything else, but I like the idea of diversifying in a way that isn't really reducing exposure, like you mentioned, because you're just taking, well, I guess you could say as a total percentage of your net worth, you are reducing your exposure because now you would have a little more Bitcoin exposure. Well, your net worth is bigger, but you're not actually reducing your real estate exposure in terms of the value of that. You still maintain 100%. So
Keep all the upside in your home.
yeah, upside in your home and upside uh, in Bitcoin. And I think we need more products like this because the existing model of only really thing available to the average person today are these Bitcoin lending and borrowing platforms where you get a loan to value ratio of 50% or something, for example. Maybe it's a 1 year term. Maybe the interest rate is 10, 12%, and you're usually not required to make monthly payments. But then the interest, it's simple interest, but it's still, adds up over time. And then at the end of a year, you have to either refinance or pay it all back. And for the average person, if you're borrowing against a big portion of your Bitcoin and you don't have income to cover the payments and there's a drop, then even if you don't get liquidated and have to refinance, well, now your loan to value ratio is going to go up, and you're just going to be that much closer to margin call and liquidation. And we saw a huge amount of liquidations over the last 4 to 6 months or so. So the more products and options like this that people have, the better. And we're starting to wrap up here. Sanjay, anything else you'd like to add, like people to know about Savannah or anything
Yeah,
before we
I'll
close?
say one more thing before we wrap up. And that is that where does Sovana get the money from? So I said that it's Sovana's money. And from the customer's perspective, it is. However, we work with capital providers, and in a way, these are also very much our customers. They're sort of the customers on the back end, right? Our front-facing front porch is Sovana to the Bitcoiner property owners. But on the back end, we work with a set of capital providers, capital partners, to whom we offer the other side of the deal. This is on the property owner side. These are folks who want more Bitcoin exposure but don't have the money. Our capital providers are sort of the opposite. They have capital and they also want Bitcoin exposure, but they don't have the conviction. They don't understand Bitcoin. They don't have the depth of belief in Bitcoin like our customers do. And so they're sort of hesitating to enter Bitcoin because what if it collapses 8%? What if it goes to zero? What if quantum? What if the government ups it? What if it's the mice? There's a number of reasons why there's a lot of capital out there that's sort of towing around the edges but hasn't yet taken the plunge. And what we're telling them is, hey, look, we'll give you a way to get into Bitcoin with a safety net, in a way that you can't lose money. Why can't you lose money? Because we've got someone on the other side who is Bitcoin native, who knows there's no way in hell that Bitcoin's going to be down for the entire 5 year period, or is certainly willing to take that risk in exchange for investing in Bitcoin with no money, right? And so that's something I really love about Sovana is that we're bringing two sides together in a way that unlocks Bitcoin investment, more capital coming into Bitcoin.
So, yeah, very interesting, novel stuff. So, Sanjay, how can people keep in touch with you and what you're doing over at Savannah?
Yeah, the easiest way is just our website, Sovana.io. We've got links to all our socials, my own, and you can check out everything else about Sovana at Sovana.io.
Sounds good. All right, that's going to do it for this episode of Hard Money Dispatch. Thanks to today's guest, Sanjay Mavinkurve, for being on the show. And be sure to like and subscribe if you're watching on YouTube. Leave us a 5-star review on Apple Podcasts or Spotify. And subscribe to the Hard Money Dispatch newsletter. I'll leave a link in the description, and we'll see you next time.